Gap's largest banner Old Navy returned to growth for the first time in more than a year during its holiday quarter as the retailer delivered earnings on Thursday that came in well ahead of Wall Street's expectations. Sales at Old Navy grew 6% to $2.29 billion, and Gap's overall gross margin surged 5.3 percentage points to 38.9% thanks to fewer markdowns and lower input costs. Analysts had expected a gross margin of 36%, according to StreetAccount. Shares of Gap jumped about 5% in extended trading following the report. Here's how the retailer did in its fourth fiscal quarter compared with what Wall Street was anticipating, based on a survey of analysts by LSEG, formerly known as Refinitiv. The company's reported net income for the three-month period that ended February 3 was $185 million, or 49 cents per share, compared with a loss of $273 million, or 75 cents per share, a year earlier. Sales rose slightly to $4.3 billion, up about 1% from $4.24 billion a year earlier. Like other retailers, Gap benefited from a 53rd week during fiscal 2023, and without it, sales would have been down during the quarter. The extra week contributed about 4 percentage points of growth during the fiscal fourth quarter, the company said. Comparable sales during the quarter were flat, compared to estimates of down 1.1%, according to StreetAccount. In-store sales were up 4% while online sales decreased 2% and represented 40% of total revenue. The retailer decreased inventory by 16% during fiscal year 2023, and with those levels now in check, Gap is working to hold the line on promotions and drive full-price selling. During the quarter, Gap saw higher average selling prices across all of its brands, and it expects to grow its gross margin by at least a half percentage point in fiscal 2024. We were the authorities of taking on trend basics, expressing it in ways that drove cultural conversations. At its best, we were a pop culture brand that did much more than sell clothes, and as you know, we all know, we lost our edge. We devolved from a pop culture brand to a clothing retailer, and today we're moving again, CEO Richard Dickson told CNBC in an interview. We're getting our vibe back. Headed into the holiday season, Gap struck a cautious tone with its outlook as it warned of an uncertain consumer environment, and on Thursday, it reiterated those concerns. In the current quarter, it expects sales to be roughly flat, compared to estimates of down 0.2%, according to LSEG. For the full year, it expects sales to also be roughly flat, on a 52-week basis, compared to estimates of up 0.5%, according to LSEG. I think we have to look at 2023, where we did see a lot of volatility and uncertainty in the environment. We have inflation, student loan payments, high interest rates. We had dwindling consumer savings. Now fortunately, despite many predictions to the contrary, we didn't see a recession in the year, but our industry was definitely affected, said Dickson.